It's almost impossible to not get rich investing in real estate if you have. I think that's the biggest recommendation that I would give is.
I think that less is more, simplicity is the win.
What's really cool about commercial real estate is you can do a couple deals can really change your life.
But you'd have to make a series of really bad decisions along that 20-year horizon to actually mess that up. Be very patient, be very selective, make sure you buy a property after you're an expert in everything, and be prepared to hold it for 20 years. I think you win.
Hey, what's going on, everybody? Got another episode of the Commercial Real Estate Blueprint Podcast. We've got an amazing guest today, Chad Griffiths. He's an industrial investor, broker, and has just been in the industry for a long time. Graham and I have been focused on industrial for the last little bit, and I reached out to Chad on social media, and he answered my DM. So to my delight, we got him onto the podcast today. I'm super excited for it. Chad, appreciate you joining us today.
Yeah, it's an honor to be here. I think the easiest way to describe myself is the world's biggest industrial real estate nerd. I love, breathe, sleep, everything about industrial real estate. So it's an honor to be here. I'm happy to chat about anything you guys have in mind.
Yeah. Thank you so much for coming on. So for people who don't know much about you, aside from being, the commercial real estate industrial nerd, tell us a little bit about your story and your background and kind of how you got into commercial real estate.
Yeah, so I first joined the industry as an agent in 2004. And like a lot of people, I got into residential first. And just it's all that I knew at the time. I had bought and sold a few houses with some friends, and we didn't really make any money, but kind of got the itch for doing real estate. So started as a residential agent in 2004, quickly realized it wasn't the path that I wanted to go forward on. So made the switch over to commercial real estate in 2005 and been at the same brokerage since then, so coming on 20 years now, focused on industrial real estate. 2014, I started buying properties as well. And that I've bought and sold some residential, and I've tried dipping my toes in that in the past, but having made the switch to industrial real estate exclusively, that just became a passion of mine. So it was logical that I'd try to invest in it as well. So with some partners and a whole lot of debt, we've accumulated a pretty decent portfolio over the last 10 years. So combined with being in the brokerage full time, having a portfolio, I talk about industrial real estate all the time on social media. It's no joke when I say that I live, breathe, and sleep it.
That's really cool. Yeah. When I first joined, so I've only been in brokerage like 8 months, 9 months at this point, and I'm loving it so far, but it was a struggle in the beginning to figure out, we could go office. There's so many ways to get distracted because commercial real estate has so many different levels to it. And just kind of naturally, based off of kind of the leads that we've got, we've really focused on industrial, and we're loving that. We're still a little distracted with some of the other things just for like past clients of Graham's, but I won't say it's too much of a distraction. But I know one of the questions that Graham wanted to ask, and let him ask, is about the focus on industrial real estate and why.
Yeah, and it was purely accidental for me. When I went from residential to commercial, I thought I'd be doing office or multifamily or retail, that more well-known or glamorous type of commercial real estate, not dirty old warehouses. But the office that I joined was very similar to you guys. They just had a heavy focus on industrial. So when I started looking at who all the people I could learn under and have as mentors, if they were all focused on industrial, it just made sense. So it was purely accidental that I got into industrial. But it wasn't until I started going through my career trajectory where I started looking and saying, well, these are all buildings where things are made. So you can go through a factory and you can actually see how something is manufactured from a raw piece of steel to a finished part. And interesting, I just went through a space yesterday where they make autonomous robots for tailing ponds at like mines and things like that. And that's what they did, is they would have raw steel that would come together to form this amphibious looking device that was as big as a car, and it would be meant to go out autonomously onto a tailing pond to prevent people from having to doing it. And that's just one story of all the cool things that we get to see in these factories of where things are actually made. Whereas an office might seem glamorous as like a trophy asset, as some people might call it, but inside it's just people working at computers. And that's really boring when you compare that to a factory where things are actually being manufactured from scratch. So I love just the story element of it. I love the fact that this is this is the heartbeat of our economy. If things aren't made, we don't have anything. Everything that the mics, everything we're doing right now is all made somewhere. So that just fascinated me from the ability that if you want to succeed in anything, you should be pretty passionate about it, because it's hard to have success unless you're really enthusiastic about it. And I can't get enthusiastic about thinking of a bunch of people working in cubicles in an office building. It just doesn't excite me. So for my investment strategy, I started looking at it. I'm in industrial real estate already. I'm getting to learn everything. I'm getting to understand what tenants want, what companies need in a space, what makes a good building versus a poor one. And when you start having a passion for that, it just made sense to also invest in it. It's and Warren Buffett said, is only invest in companies that you understand. Well, I would add on to that, invest in companies that you're also passionate about, and invest in real estate and investment vehicles that you're passionate about. So I love everything about industrial real estate. I think it's just such a cool, unknown area of the economy that is so important and so pivotal to everything that we do, that to deeply understand it, to be passionate about it, where I can get up and want to just read what's happening in the news as it pertains to this industry, that all of a sudden gives me a bit of an insider advantage to somebody that doesn't share that. So if I can combine my passion and my excitement for it, and I can study it and want to study and learn everything about it, it only makes sense that I'd invest in it as well. And that has proven to be the case. We've, outside of one property that I've bought that was a bit of a miss, everything else has done very well. So a part of that is also luck. I mean, you can never discount luck in this, but I'd like to think that having those insider advantages and the passion for it also gives me a bit of an edge. And I think that that's the key to everything. I think that's the key to success in brokerage. I think that's the key to success in investing, is really having a passion for it. And it's served me well throughout my career, and I don't intend on slowing down anytime soon.
Yeah, that's really cool. That's amazing. When you was talking about the passion and stuff, I really connect there, because I also have a glove company that when you talk about like the workers and stuff, like my mind immediately went to, one of my customers. It's like, we had a 20-minute conversation yesterday about gloves, and that's another one of my passions. It goes right into industrial real estate. So when Graham said, I think we're going to focus on industrial, I'm like, yeah, I could talk some industrial real estate. I know like a lot of these tenants and what they do, and like why they need this kind of safety thing and that. And like my mind goes off into the safety world. And it's just really cool, because, these are passions, these are things that I think about literally 24/7. So that's really cool. I'm glad you said that.
Well, it's a great parallel there as well, because I'm sure if somebody was looking for gloves and there's the generic retailer, we could pick anyone that just sells gloves off the shelf, or there's somebody that's specialized like yourself, and you actually had a question. If I was in the glove buying industry, or if I was a purchaser for a company, I'd rather talk to someone like yourself who's passionate about it, because you're going to understand everything beyond just the simple mechanics of making a glove. There's reasons on why it was done, and here's why one might be better than the other. That type of passion and service is so valuable. And in this commodity driven world that we seem to be entering into, where it is just becoming like that, like you just go online or you go to a store, you just pick whatever it is. I think what's going to separate the winners from the losers are the ones that actually have the passion, the ones that are going to say, yes, you can buy the cheapest one, but value's different than price. So let me show you why these ones are going to be better for what you're needing. And you actually take the time to do it, and people can sense that passion. I'll take passion over price any day of the week.
Yeah, that's exactly the conversation we had. And what we like to call it is customer discovery. I went to the customer, they had a couple of issues. They're like, well, I mean, I could have a sample to you in less than a month, and we could figure this out. Let's make the best glove for you and your specific use. And he was just blown away, because he's like never had that issue, or he's never had that kind of conversation with a glove company before. So, I mean, you're 100% correct.
Yeah. So talking about these industrial buildings, obviously you said you have a portfolio, and I want to get into that in a minute, but, just as a whole, is there a specific subtype of industrial real estate you focus on within that? Is it smaller single tenant buildings? Is it big single tenant buildings? Is it multi-tenant buildings? Or give us a little bit of breakdown of what you focus on.
Yeah, I think just by the nature of being a smaller investor, I don't raise money. I'm not an institutional fund. I'm not even sub-institutional. I'm just a small local investor with some partners. By nature of that, we've typically focused more on smaller buildings. So whether that's a flex or manufacturing building, and I say smaller in the context that some portfolio sales can be in the hundreds of millions of dollars. Our portfolio right now is about $25 million, and the average building size is $4 million. But the first property I ever bought was a $300,000 industrial condo. So it was a 2,000 square foot little condo bay inside of a larger building, and we only bought the one unit. I know terminology can differ across different markets, so some people might call it a strata or a condo, but we only bought that specific one for a small price. That was our first dipping our toe into the market. So by nature of just being investors of the size that we are, that precludes us from chasing a big distribution center or a big box warehouse where those buildings can get in the $10-20 million range pretty quickly. So instead of putting all the eggs in one basket and only having one building like that, our portfolio is 8 buildings right now, and it ranges from a single tenant manufacturing building. We have one right now. It's about 15,000 feet on 4 acres, single tenant building, up to multi-tenant flex buildings, where one building, as an example, there's an office user, a hot tub store, a cabinet store, a flower shop, a bridal shop, and a cabinet shop in there. So it's like none of them are actually traditional industrial uses, but it's an industrial building in an industrial area, just not a traditional manufacturing or warehousing one. So at some point, maybe I look at warehousing as an option and try to look at a larger building, but they become prohibitively expensive, and it's usually reserved for that institutional family office or wealthy private investors. So yeah, I'm pretty happy in my lane. I like that flex and manufacturing type of industrial.
Yeah, that's kind of what we like too. Me and Jesse in the last 4 months have bought our first 2 buildings. So one of them was a smaller 6,000 square foot building. We bought it for $250,000. So it was a pretty good deal.
Wow.
The other one was an 18,000 square foot building that we bought. And that one's single tenant as well. So both single tenant, but on the smaller, in terms of industrial, some people might hear 18,000 feet and think that's really big, but industrial, it's relatively, it's like maybe medium. I don't know. You probably know better than me, but we like those size buildings. We honestly, if they could be multi-tenant, that'd be preferred. But yeah, the big boxes kind of scare me.
Yeah, I mean, those are typically designed for 1 or 2 tenants. So if you have a 300,000 square foot building and one tenant leaves, that can be pretty stressful. So I found that those buildings are typically owned by investors that can spread out that risk over several buildings. So it'd be uncommon to see an investor own a single 300,000 square foot building. Typically, it'll be a larger company that's going to own 20 of them. So they're diversifying their risk, that if anyone leaves, they still have income coming in from the other 19 others, presumably. To take a property down like that as a single investor, that'd be pretty stressful if you knew a tenant was going to leave.
Yeah, for sure. So one thing that's definitely interesting to me, you talked about how you're not you're not a big company where you have a bunch of investors who are partnered with you, but you're a local investor and you have a few partners. So, for the people listening, that's definitely the way that me and Jesse prefer. It's like we want to try to buy deals with as little amount of people involved as possible. Not that we don't want, several people involved. We'd love to partner with other people, but it's more just for the simplicity's sake. So what do you think the best approach is to going out there and buying your first deal?
Yeah, there's a lot of different ways to do it. I'm with you on that. I look at people who syndicate deals and they become the general partner and they raise funds from limited partners. There's a lot of responsibility that comes with that, because now you're accountable to those limited partners, or at least you should be. And there's some GPs that I think get in a bit of hot water and they wipe their hands out of it. But I think as a responsible, prudent GP, you should be doing everything you can to mitigate the downside risk of your LPs. And with that comes a lot of responsibility and comes a lot of tasks, and all of a sudden you've almost have bosses. Perhaps that's a crude way of describing it, but if you're a GP, you have LPs that are relying on you to protect their money and earn a return. Whereas myself, I've never raised money. So it's all my own capital that I've invested into it. I don't have a boss. My boss is my own money. So I like that way of doing it. It just gives me some peace of mind that I'm not managing somebody else's money. That's a tall order in my mind. That's a big responsibility that gets placed on your shoulders. But that being said, it's not also easy to go and buy an industrial property if you don't have a lot of capital. Just really simple numbers. If you're looking at a $2 million property and the bank wants 35% down, it's a $700,000 cash injection that you have to put in there. So not a lot of people have $700,000 kicking around. So in that case, it might make sense to go in and raise money and do the syndication route. In how I've always done it is I started very small. The first property I bought was with one partner, and him and I bought that $300,000 condo, and I think we had to put about $100,000 into some repairs. But we were into that for relatively the price of a house, right? But at the time, you could have got a house for 400 grand. So that's not unobtainable for an average investor. If you go and partner with somebody and you each put $50,000 into a deal and show that you're responsible and you can actually manage a property like that and stabilize it and do everything that's required of asset management, all of a sudden now you can say to your bank, I have a track record. And that's what we did. We leveraged that one building into that one condo unit into another condo unit and then slowly into a larger building, and we just kept growing. We bought that first property in 2014. That's 11 years now. So we never took the approach that we had to do things fast, that we needed to add 5 properties a year. We just wanted to add properties as they came available without incurring a lot of stress and without having to stretch ourselves too thin. I think that's what's worked for me. But there's plenty of people that have done very well in the syndication route. And along the way, they've built themselves equity into the property, and through waterfall structures, they get profit sharing on the building, and if it sells, they get a major lift on it. There's people that have done very well on it. I think it just all comes down to what's your appetite for growth, what's your appetite for risk, what's your appetite to have investors that are dependent on you. I wouldn't do it another way. If I could go back and do it all over again, I still wouldn't do the raise, even though I know people that are doing it very successfully. I think starting small, taking a long-term outlook, and that could be a 20-year outlook. That's how I'm looking at my capital. I'd like to pay off all the mortgages and have those be debt free and eventually just live off the income that's coming off of these. I've got 25-year plans for my capital. Not everybody's like that. Some people just want to earn money quicker, and they want to scale faster, and they want to have a larger portfolio for various reasons. So I think everybody should really just do a hard look on what's involved. There's still management. There's no such thing as passive investing in my mind. Unless you're buying a stock, you're actively involved in these investments, either in a JV or as a GP or an LP. You're still involved in these. So I think it takes a good hard reflection on what everybody wants, what their timeline is for how long they want to invest that capital, appetite for risk, and then really identify, looked at all the things that you have and all these buy boxes and investment criteria, then look at what's available and make a decision. The one thing I always say is just make the best decision you can with the information you have available. And unless you know all that information, it's hard to make the best decision.
Yeah, no, I think you nailed it exactly. It's just everybody's criteria is different. So there's some people who want to go out there and they want to build a $300 million portfolio, and, obviously you're probably going to have to go out there and raise money to do that. And they enjoy working with all the different investors. They enjoy all of the responsibility with that and going out there and creating value and stuff. And that's great. And then there's people, sounds like more like all of us, where we'd rather have it simpler, wouldn't want to be worried about somebody else's money, just because, like you said, you nailed exactly what we kind of thought. You all of a sudden have a boss. Now it's not your own deal. It's like, I'm okay losing my own money, but I don't want to lose somebody else's money, obviously. So it's like, if we go out and we can be a little riskier, because it's like, okay, well, this building might be risky, but there's a lot of upside. You can't really be doing that with someone else's money. So it just depends on what your goal is and what you're looking for, and also your timeline too. That's a really good point.
Yep. I completely agree.
Yeah.
I think you got to sit down and look at, okay, what do I really want to get to, and what's it going to take? Like, you have to understand the risk, like you said, of like taking on that 300 million. We don't necessarily care to have that. If for some reason it gets to that point, then yeah, but we want to keep, I think that less is more. Simplicity is definitely the win. And
there are reasons to scale quickly. Like, I understand the rationale behind it on why some people will. You're just in a position to bring on more support staff. You might hire an administrator. You might bring property management in-house. There's all sorts of reasons to scale. And there's ego behind it too. Some people will just brag about how big their portfolio is. They might say, well, I've got 1 million square feet of assets under management. And that's a selling feature where they try to use that to leverage to raise more money. I just have zero ego. Like, I don't care if somebody has a bigger portfolio than me. In fact, I'm happy for them. Great. I'll go celebrate with you. Like, let's talk about how awesome that is. Like, great for you. I have zero ego in it. I'm looking at money so far down the road that it doesn't interest me, that I don't need to get rich. I don't need to hit a home run on any one project. I'm fine using that baseball analogy of just going out and hitting singles. And sometimes you might strike out. Sometimes you might take a walk, but I'm just trying to hit singles. I'm a pretty simple guy when it comes down to it.
Yeah, for sure. And also too, I mean, I think that what's really cool about commercial real estate is you can do a couple deals can really change your life. Either whether it's 20 years from now or even, some of them can change your life pretty quickly and support whatever lifestyle it may be. Like for me, I told you before we started recording, I have 3 kids, and my wife and I just, my main thing is like, yeah, I love commercial real estate. I'm very passionate about it. I love brokerage. I love the investing game. I love going out and trying to find deals, but I also love spending time with my family. So I want a good balance of that, and to be able to do kind of what I want to do when I want to do it, which is, hanging out with my family. So I think there's a lot of that too, like what your goals are.
And on top of that, being a broker, I know you understand this, like the whole, like that cycle of, oh, we got a check. And then, 3 months, you don't have a check, and then you get a check. And then just like what we're looking for is consistency. We want to scale it to a point where we have a passive income that we can, not chill and retire. We joke about the whole retiring thing, but, to get to our point where it's not like this hamster wheel of like revolving in the brokerage world of like, I don't have like any more deals. I need to keep going. Like we want to be able to take a second and go hang out with our family if we want to, and not have to worry as much, if you will. Still going to be working those deals. It's not passive, right? It's passive, but it's you're still working on those deals. But
well, and that's the best thing for investors that can take a longer term outlook. And whether you're a broker, whether you're in another field and you just want to invest, my theory is that it's very easy to go broke in real estate if you're thinking on the short term. You overextend yourself, you buy 3 properties when really you should have just focused on 1. You make the wrong decision, you stretch yourself too thin. It's really easy to go broke investing in real estate in the short term. But I also think it's almost impossible to go broke if you have a 20-year horizon. So whether you're 30 years old and you buy a property, or whether you're 50 years old and you buy a property, that 20 years is going to come either way. And if you buy a property responsibly and you put a 20-year amortization on it and you cash flow, so let's just say you buy $1 million property, and I don't know what the actual compound annual growth rate would need to be, but let's just say it doubles. So let's say you buy $1 million property and it doubles to $2 million in 20 years, and you've paid that property off in 20 years, and now you have a $2 million asset. You have to like work to screw that up. Like you'd have to make a series of really bad decisions along that 20-year horizon to actually mess that up. You'd have to intentionally mess that up. So I think it's almost impossible to not get rich investing in real estate if you have that long-term horizon. But far too few people, I don't know if that makes any sense, have that outlook, because they think, well, I want to replace my income right now. And you see these gurus, these investment gurus go on TV and say, replace your income within 5 years by investing in multifamily. That's just impossible. That's just not going to happen. You're taking on so much risk that there's an equal of a chance that you lose all of your money versus replacing your income. Over 20 years though, if you can buy properties, hold them diligently, manage them responsibly, not make mistakes, not intentionally screw it up, and hold it for the life of the amortization, and have an asset that's appreciated and cash flowed and now is paid off at the end of 20 years, how do you not get rich? Like I honestly think that very, very difficult to get rich quick in real estate, almost impossible to not get rich over the long term.
Yeah, no, definitely. And I definitely, it's easy to fall victim to that. Like, hey, let's do this. Cause we did a deal that was a decent amount of cash flow, and it's to fall victim to the sense of, I want to buy, several more of these this coming year. And we do have goals to do that. But I also, me and Jess were talking about it. I was like, let's try to buy another building or 2 next year or this year. But let's not just force a building. Like if it's not a good deal and it doesn't fit everything we're looking for, then let's not just force it, because like you said, you can do one deal that can send you the other direction.
Very quickly.
Yeah. So that's really, I think really good insights. One big thing we want to talk to you about, obviously you're very heavy on social media. You're heavy on YouTube, LinkedIn, X, all these things. So why? That's the question. Because, we're obviously doing it as well, but we want to know for people listening, like, what's your reason for it?
There's a couple reasons, and I can actually go back to 2020 when I really started getting active in it, because I have been on Twitter. I saw the other day, I've been on there since 2009. So that's 15 years I've been on Twitter, but I didn't really start getting active on it until 2020. And that's right as we entered the pandemic. If you guys remember, in that March, I think it was March 14th, March 15th, the NBA canceled the season, the NHL canceled it right after. And you just knew that we were headed for something that none of us have lived through before. And it turned out to be that way. There was 3 months where it was so quiet. And I get a bit restless from time to time where I just can't sit idly by and wait for things to change. So I had the idea of starting to create some content. And it started with actually sharing some interviews that I was doing with people in my office. So I'd interview somebody that has been through recessions before, and I'd just share it with the other people in my office. And I was getting pretty good feedback on it. So I was, maybe other people would want to hear this. If 20 people are benefiting from it, maybe there's 2,000 people that I don't even know who could benefit from it. So I started doing some interviews. I started creating some content on things that I wish I had when I started back in 2005. I came from the residential world. I knew nothing about warehouses. I was drinking from a fire hose, and there was no information available at the time. There were no videos, there were no books, there were no courses. So I just thought maybe I can help fill that gap and help the next generation of people coming up. And I just started having fun doing it. It wasn't even an opportunity to necessarily make money. If anyone's followed any of the content that I put out, I never mention what city I live in. I don't mention what company I work for. My accent gives away that I'm a Canadian, but I don't even mention that I'm a Canadian. All my focus is on trying to provide value and just try and provide information. And I try to remove myself from that equation of it being about me and more about, if somebody's coming to look at this content, they want something. They don't want to hear from me. They want to learn something about loading doors or ceiling heights or power or whatever it is. So I've really tried to just focus on the audience, and it started growing. So once you start realizing that you're reaching a bit of an audience and you are helping people, and I've been very fortunate to get emails over the years of how I've helped somebody with something, that's a pretty cool feeling. So I seen that I was building a bit of an audience and I was helping people out, and just really, really enjoyed it. Like, I love doing this. I've been fortunate to be on podcasts. I have my own podcast now, so I've been fortunate to interview some cool people too. I love doing this. So it all goes back to me just being the world's biggest industrial real estate nerd. I love doing this. So that's what got me into YouTube and creating videos. And that allowed me to start creating shorter form content that I could put onto Twitter, or I could put onto LinkedIn. And it's all just been one ecosystem that evolved from me being bored back in 2020 to discovering something that has just been a really fun ride. So that's not a great story. I don't have a big strategy on this. I don't have an end goal. I always say that if anyone remembers the Batman movie where Heath Ledger was the Joker, and he said, I'm like a dog chasing a car. I don't even know what I'd do if I caught the car. That's me. I don't have a strategy. I don't have a plan. I just really love doing it.
Yeah.
That's really cool. I think it's so true that, like, when I first started, I started in 2018, kind of had just graduated and started in commercial real estate. And then in 2018, there was like nobody making commercial real estate videos, like hardly at all. 2020 came along. I remember the pandemic, and I was watching a lot of commercial real estate videos. And really one of the only people I could find was Tyler Cobble, who I'm sure you've connected with. We've had him on this podcast. He's a really good guy. And he kind of inspired me to be like, man, I would love to do that one day once I get to know a little bit more about real estate. But, so, I mean, you said you focus mostly on your audience and stuff, but has it had an impact in your business? I assume it has.
Oh, definitely. Like, it's funny. I started this year off determined to make a ton of cold calls. So we're January 10th right now. I've made more phone calls outside of, I think I started on January 2nd or 3rd on when I started really making a bunch of phone calls. And I've just made a ton of them. And it's funny how many people I'll call and they'll be like, hey, I just watched your last podcast, or love what you're doing on there. It's astonishing. I called a few people in different cities that just to try to get on their radar, and they knew about it. So the reach that I've been able to get, and personal branding, I suppose, would be a way of describing it. Mm-hmm. That personal branding has been great. And again, I attribute that all to not talking about me, but instead just trying to add value. If you're adding value to an audience, and that organically helps grow, that helps to get more reach. And now all of a sudden, people will know of me in markets that I never would have even thought about, just because the channel and my presence has been able to grow, which again, it has never been my model. My model isn't to try to be this massive presence. I just want to provide some information, and if it helps grow, that's a great side benefit. But yeah, it's the amount of people that I've got to reach, and it's unquestionably given me business in terms of deal flow. And I've looked at a ton of investments that have been presented to me all across North America as a result of it. So that's been a very cool application of it for sure.
Yeah. It does a really great job of marketing yourself, whether you try to or not. Like you say, adding value is 100%, what we are trying to do too. Like, when I was in the military, I wasn't, sure exactly what post-military was going to look like for me, and kept up with Graham. We wound up buying a duplex together. And honestly, it was because of social media. Like I saw what he was doing a lot, and he pushes me on it all the time. It's like, dude, you gotta put some content out there. And, I listen to him. I give him some pushback. I'm just messing with him most of the time, but it really does. And like, I've been posting, and you get people from college and just, everywhere. And they're like, hey, I had a question about this. I was looking at potentially doing that too, or doing this. And then you just never know where the conversation is going to take you. So, I think you got to have that mindset with cold calls and everything. You never know like what that next call, what that next post, what it's going to get you to. So, I really think it's cool. I like what you're doing a lot.
Yeah. And I think it's very clear for anybody listening, like the majority of people don't know how difficult it is to grow a YouTube channel. It's extremely difficult, and you have quite a bit of subscribers, and that's obviously just from the value that you're providing, because people wouldn't subscribe if they weren't getting value. And YouTube is like the ultimate filter. Like people just don't like because it's based off, for people who don't know, it's based off your watch time. So if somebody starts watching your video and then they stop watching after 5 minutes and it's a 20-minute video, like your video is going to go nowhere. But if you're providing value and focusing on the audience, they're probably going to keep listening. So I think you've done a good job with that. Question I have for you though, do you do all of this, the social media stuff, including YouTube yourself, or do you have a team who helps you with it? Or
Yeah, I've got a podcast producer that I've had for 3 years now. So he does a lot of the back end stuff on the podcast. A lot of the videos that I do outside of the podcast interviews, I'll typically edit them. I'll sometimes outsource if there's something beyond my skill set, but that's also time dependent. So on my channel, the most recent videos that I've done have been all podcast interviews, because it's a function of how much time that I have. So at some point I might need to do it, but it all goes back to, I just love doing it. I really like coming up with an idea that I think would resonate with people, give a little bit of information, provide them something in their arsenal, and then going through the whole process of filming it, editing it, figuring out how to package it and then put it out there. I just really enjoy doing that. I don't get to do as many of those as I have, and sometimes I can pound through quite a bit. In the summer when we're typically slower, that's when I can put more out. But the podcast producer has been great, and I think that's the key part about that is that I started solely by myself. Didn't have a mic. I've got a podcast studio in my house right now that I've built out over time, just because I've invested enough in it. But I started with just my laptop and the webcam and the internal mic on the camera, all by myself, just interviewing people. And I did that for a year, trying to get, does this actually work? Is there people that want to listen to this? And so I didn't go out and go full tilt off the bat. I added it in stages, and then I brought on a podcast producer after time to help with that. And that's freed up a lot of time and allows me to put out a podcast usually once every week or so. But yeah, I started very simply. And I think that's the best way to do it is, yes, you can get big, and Mr. Beast as an example on YouTube, who my kids love. He probably has a team of a couple hundred people. So that's at the exact opposite end. There was me on my laptop with the webcam, just me, and then you compare it to Mr. Beast, who's got hundreds of people on his payroll. That's the operating band that you have to work with. You can either be on one side, or you can start growing and adding. I don't think it's necessary. I think a lot of people can forgive certain things. Like they can forgive my production isn't going to be at the level of Joe Rogan. They're not expecting that. I think for the most part, people want to hear genuine conversations. They want to have audio that's not distracting. They don't want to have things that are taken away from the message. But the message is the key part. And that doesn't take a lot of outside help. if you just find someone that's a really good professional or they're an expert in a field, like today, actually, I'm interviewing a guy who's an expert in warehouse racking. That's all that he does. He's an engineer and he just talks about warehouse racking. I'm just going to ask him a bunch of questions about how people need to be aware of that. And they need to say, okay, well, why is warehouse racking important? And what do you need to be aware of? Having a big production studio or having people overseeing that and doing everything behind the scenes, it isn't necessary. If anyone's interested in that topic, they just want to hear a genuine conversation from somebody that's in the field, that is an expert in that space. And that's what they're focused on. So that's a long-winded answer of saying help is important because you can't drag yourself down in doing all the things yourself, especially as things get added to your plate. But you also don't need it. And especially in our space, you guys are in industrial estate, I'm in industrial estate. People that are tuning in, they don't want to see a Hollywood blockbuster film. They just want to see content that's going to help them out. So I would say that it's not needed unless you get to a level where you're starting to do a ton of episodes and you're trying to start putting out a bunch of content. It's very manageable for a person if they just focus on the content and try to avoid the temptation of it being a Hollywood blockbuster.
Yeah, no, I think that's a great point. Just the kind of goes back to your original point of like, it's just about the value. As long as the audio is good and you're providing value, then, that's really what matters.
Somebody needs to come away feeling one of two things. They either need to have been entertained or they need to be educated. That they need to come away with saying, I learned something, or that was really funny, or that was really awesome to watch. And it's hard in industrial real estate. It's hard in almost every area, really, unless you become a really good storyteller and you've got a budget to tell these really elaborate stories instead of these elaborate scenes. It's really hard to actually entertain. Whereas educating is pretty simple if the focus is on the audience, putting yourself in their shoes. What do they want? If someone's coming to a video, they want something from that video. They click on warehouse racking. They don't want to see a bunch of fluff and a bunch of infomercials about that company and how they're the best providers of racking. They don't want that. They want to know, how high can I put my racking? How do the sprinkler? I don't need to get into it, but there's a series of things that they're going to want to learn from it. That's the focus. If all you're thinking is audience focus first, they're the hero of the story. They're the ones that are coming. You need to focus on them. It's not about me. That's why I don't talk about myself. People just don't care to come on to a channel. They don't know me. They don't care to know me. They just want to learn something very specific. Put the focus on the content. Put the focus on the audience. What are they there for? How can you help them? How can you have them leave watching that video feeling that they learned something? It's not a complicated process, but we tend to overcomplicate it as professionals.
I was curious what platform you guys tend to have the best engagement on, because if we're talking about value and reaching our audiences, and not necessarily like feedback, but like what do you see the most engagement on? Which platform?
Twitter by far, which is interesting because that's probably where I put the least amount of work into, whereas putting a YouTube video together can take hours, whereas on Twitter I'll just be sitting in my truck in between meetings and I'll go on and I'll say something stupid, and for whatever reason that gets the most engagement, whereas I can spend several hours on a video and get a handful of comments. I don't have a great answer for what works on that, other than being consistent is really key. And if you get 5 comments, then you get 5 comments. If you get 0 comments, you get 0 comments. I think that there's a lot of vanity metrics that we tend to overemphasize and think that they mean a whole lot, when in reality, if you put out a video, you guys throw out a video on industrial real estate and nobody comments, but 5 people watched it and it was meaningful to them, that's infinitely more important than getting a bunch of comments that are irrelevant anyways. Great video, guys. That was awesome. Sure. I mean, that feels good getting a little bit of engagement, but it's how are you actually helping somebody? One area which has surprised me is Spotify, because I've never even really followed along with that. We strip the audio on our podcast and then put that on Spotify and Apple and other ones. I'd never even tracked Spotify. I was always tracking YouTube and Apple and some of the other ones, but Spotify very quickly has become one of the most popular viewing spots or listening spots for our podcast. So I think it's try to throw as much at the wall as you can and try to just do it consistently and recognize that some things will work and some things won't work and some things might never work. But it all goes back to what's the reason for doing it. And for me, it's very simple. I just really enjoy talking about industrial real estate. I enjoy getting to talk with guys like you. I get to enjoy talking with this racking guy that I'll talk to later today. I just love doing it. And for me, whether one person listens or 20 people listen, I would do it
That's
either
awesome.
way.
Yeah, that's a great reason too. And it takes a lot to keep doing it. So you really have to enjoy it, or else you'll just not keep doing it. Like if you start making something or putting out content that you don't enjoy and you're not passionate about, you're not going to stick to it. It's just not going to happen.
100%. I can't remember the stat, but I did hear about it recently, is that something like 95% of all podcasts fail after the 7th episode. For that reason, is it's tough. It takes work, it takes time. You're reallocating time that you could use for something else. And if you're not getting a uptick, and if you're not getting the engagement, you're not getting the comments after the first 7 episodes, it's very tempting to quit. But if you're passionate about it, you don't care. You don't care whether one person listens or not, because you're going to do it regardless. So that passion, I don't know. I've yet to see something in 20 years I've been in business. I've yet to see something as powerful as passion.
Yeah, no, that's great. So going back to commercial real estate, investing in industrial, just as a whole, what advice would you give to somebody, since you've been in it for so long and obviously have a portfolio and stuff? What advice would you give to somebody who's brand new and they want to buy the first commercial real estate deal? What would you tell them to do?
Be prepared to be very, very patient. And there's a temptation, especially in this get rich culture that we're inundated with all these gurus trying to teach people things on how to get rich quick and buy your first property in 6 months and replace your income in 5 years. In that culture that we're in, try to resist that and be the antithesis of get rich quick. And to do that, it might take 5 years before you find a property that actually makes sense for you, and you're in a position to buy it without having unnecessary stress. I think that's the biggest recommendation that I would give, is be patient and use that time where you're being patient to flush out a number of things. Make sure you're an expert in industrial real estate. You should know everything about it, what tenants want, what tenants don't want, what's functional obsolescence, what could be an issue. Understand your local market so that you know sales, you know lease transactions, you know market comps, you know who's in the market, who's moving. You know everything about that market, so you're a certified expert in your local market, and you know everything about industrial real estate as an asset class. You give yourself enough time, buy that first property right, because the first one sets a tone for the trajectory of your investing career. Be very patient, be very selective. Make sure you buy a property after you're an expert in everything, and be prepared to hold it for 20 years. I think you win. Like I don't see many people that follow that and don't win. If you are trying to get into it quicker, find somebody in your local market that you can partner with. Find an expert that's already done it. Perhaps you just become the capital and you try to learn everything from them, and it becomes an exercise in osmosis where you're trying to take all their information in exchange for you giving something to them. And that can work as well. There's trade-offs with that. So there's people that have probably done well by it. I can't. All I can speak about is I worked in this industry for almost 10 years before I bought my first property. So that's what's worked for me. And it's been 10 plus years since, and I've paid off probably close to half the mortgage at this point. And on that one single property, not to mention all the ones that we bought since. So that's what's worked for me. If people have other strategies and they want to pursue it, just really focus. My biggest thing as an investor is downside risk is your most important thing that you need to identify and control, because it's nice to have pro formas that say, well, if everything goes right for the next 10 years, here's what our IRR is going to be, and here's how much money we're going to make. That's great, but none of us have any idea what's going to happen tomorrow, let alone 10 years from now. So whatever route you go, whether it's trying to partner with somebody or being a limited partner or doing it yourself, identify your downside risk first. Figure out what your downside risk is, and then start going through the process of trying to extrapolate that into the future. But I really think that, circling back, be an expert in what industrial real estate is. Be an expert in your local market. Know exactly what's going on. Buy a right property where you're mitigating your downside risk and have a long-term outlook. I don't know. That's as good of a recipe for success as I can think of.
Yeah. I mean, just highlighting the whole know your market thing. We've had several principals and stuff tell us that, and, just own a street, even if it's just that. And like Graham's kind of done that all, like almost even by accidentally made a really good connection on a cold call, and just we bought, 6 buildings in like a really small, area. We're bird dog on one. We kind of talk about it in another episode, but just being on the ground and talking to the tenants and stuff, I personally have learned so much through that. It's helped me to learn the market better. It's helped me to learn what tenants want. And I can now take that to the next step and say, okay, like this building is really great because this market doesn't have this ceiling height, and we would be one of the few that do. So we can market it probably even a little bit higher because we know that what we have is not what's in the market. And you just learn those type of nuance type things by talking to people in the market. And it's not just people who own real estate, as I've learned, it's people who are going to use the real estate, which is almost more important, honestly.
Yeah. And the point too, we also emphasize a lot, the second thing you said, which was, if you're going to go out and try to do a deal quickly, join somebody who knows what they're doing. Don't go out and do the first deal by yourself. I mean, you can, but you could get in trouble doing that. So definitely partner up
very quickly.
Yeah. Partner with somebody who knows what they're doing, and get a mentor. I mean, that's really one of the biggest things we say too. Get somebody who's in the space doing what you want to do, and get a mentor.
I couldn't agree more with that. There is so much value in having somebody experienced helping you walk through it and helping identify potential blind spots. Value of a mentor when you're investing is invaluable.
Awesome.
The value is invaluable. That was a great point. Yeah. very, very profound.
Yeah. Well, thank you so much for coming on, Chad. We seriously appreciate everything. We've gained tremendous value. For the people listening, and they want to connect with you, where's the best place for them to go connect with you?
Twitter or X, LinkedIn, and YouTube. I'm active on all of those, so I try to go on and check messages on those daily. So if anyone wants to connect with me on any of those, that'd be great. And I've got a website too, industrialize.com, which is another resource. I've got a bunch of free tools and stuff on there, and working on a book, hoping to actually release a book on industrial real estate at some point this year too. So hopefully I've got a lot on my plate already. So it's, we'll see if we can get that on there too.
That's awesome. I'll be on the lookout for that. I'm excited to read it.
Cool. Appreciate it.
Yeah. Well, thank you so much, Chad. Thanks everybody for listening.
Thanks.
If you want to connect with Chad, go find him. If you want to connect with us, let us know if you have questions or anything like that. We'd love to help, and we'll see you in the next one.
Thanks, gents.